Hello again, still at the second chapter dealing with the oscillators, and this is going to be the recording that deals with the most famous oscillator of them all and presenting the relative strength index, the RSI. If you click the insert indicators, oscillators, and choose the relative strength index in here, so this is the famous relative strength index. Any trader in this world, regardless of the moment he or she started to trade, took at least one look at this oscillator. That is being well advertised all over the technical community in the world. The standard period for the oscillator is 14 periods, but you can change it as you want, as you wish. I am always using a 14 period for the relative strength index, and this is an oscillator that stays into my analysis all the time. There are a lot of strategies written out there based on it. A lot of books based on it. How to interpret them, how to interpret its moves, how to find support and resistances and divide the range, and so on and so forth. The levels, if you click on the levels in here, the default settings are for the 30 and 70 levels, and the visualization, of course, we want to have it as better as on all the time frames that we might have. The oscillator travels between the 0 and 100 level, but values above 80 are extremely rare, and of course values below 10 or something like this are also extremely rare. The default setting comes at 70 and 30 being the levels presented by any broker that you might decide to work with. This is the oscillator in here, and you see it is giving you values between these 30 and 70 ranges as price moves. This is the same on our chart that we looked at until now. One of the most important theories out there saying that anything that is above 70, so if you have an oscillator value on the RSI and you're looking on the data window in here, so if you have an oscillator value that it is higher than the 70 level, then this is considered to be overbought. So you might just write in here that this is considered to be overbought territory, and let's make it with white so that we can actually see it. Okay, and everything that is considered to be below the 30 area, it is considered to be an oversold territory. Now what this means? Well, this means that when the indicator travels into the 70 in here, so look at here, so price going to the upside and moving, the relative strength index actually is breaking the 70 level into the upside, enters an overbought territory, and from that moment on you should look for short signals. I'm not saying you should go short into that area like this, but just so that you know that you are in an overbought territory, and being in an overbought territory, normally this area in here needs to be an area to be sold. If you want to mark something on your chart, regardless, these arrows in here come from the arrows button, and under the arrows button you can find the arrow up, arrow down, the X sign. If you want to put a number, there is a price level on a specific candle, then you just take for example, the rise price level and put it somewhere in here, and see you have a value for every dot and place on your chart. And if you want to select a specific area, just click Insert Shapes, and you have in here the rectangle, triangle, and ellipse, and just do the rectangle, for example, and then click and drag over a specific area, and this is your area that you want to select. So the relative strength index breaks into the overbought territory, and you are trying to look for for short signals, I don't know, reversal patterns depending on your time frame. This is a 1 hour time frame. You look at candlesticks, trying to identify candlesticks that may be justifying initiating a short position, like dojis, like hammers, or inverted hammers, or whatever, or if the price you see in here is coming into the oversold territory, then the pressure would be actually to try to buy from these levels. So in here, in oversold territory, people normally try to buy, and in overbought territory, people normally try to sell. Now this is one interpretation and one way to use the oscillator, this oscillator, and the other way is to look for divergences between the price and the actual oscillator. Take a look at what it does. So the price in here going to the upside, okay, the oscillator also goes to the upside. Price makes a new high, the oscillator makes a new high. Price makes a new high, the oscillator makes a new high. So no divergences so far. Price making a lower high, the oscillator makes a lower high. No divergences. Then price in here, see, price coming to the downside, price makes a low, oscillator makes a low, and then price makes a new low. So take a look in here. Let's take a shape in order to mark what we are trying to show in here. So this is one low, and as we learned just previous, let's try to put a number, a value in here. So it makes a low into the 129.23 for this particular example, and then the oscillator has a value of, in here, 25.66. So the oscillator has a value of 25.66 and the price 29.23. Then the price started to go to the upside, but comes down and makes a new low, and let's mark this low also, makes a new low in here. But look at the oscillator, look at the relative strength index. If you put a number on it, and let's pick now the right price label, and the low in here is 129.11, so 129.11 lower than 129.23, but the oscillator value at this moment of time, it is actually 31.55. So 31.55, it is higher than 25.66. So there you go, you have a divergence between the price and the oscillator, and that should be a bullish sign in this case, because the divergence is on the lower part, on the part considered to be oversold. So if you take a trend line in here and try to mark the divergence, this is your divergence. Okay, so the price coming and makes a new low, but this low is not being confirmed by the relative strength index. As you can see, the relative strength index is already on a rising path. The price is on a falling path, and this is to be considered a bullish sign. And normally, when you apply this the relative strength index and looking for these divergences, from the moment you have a divergence, and this should be considered a good place to go long in this specific case. Now the same, this is a classical case of divergences. You can use these divergences with other oscillators as well, but on the relative strength index, everybody is looking at this. The whole community of traders look for divergences between price and the relative strength index. And this was a classical example of a divergence used between the price and RSI in order to identify a long position. But the same example can be done on looking for a short position. And in here, look at the price. So price coming to the upside, okay, in here, and then makes a new high. Let's mark the areas in here. So this is a previous high, and then it makes a new high, like this. Let's try to mark the high. So the high in here is 131.18, and then it makes a new high into the 131.34, but these highs are not being confirmed by the RSI, as the relative strength index actually is coming to the downside. It has a downward path, but the price it is making a new high. So 2 consecutive highs, the second high not confirmed by the relative strength index, and this is being called a divergence between the two. And if you have a divergence between the two, normally this being an oversold an overbought territory, you should look for bearish signs. So trying to initiate a short position, going short at the market, or using pending orders. And as you can see, it is actually being confirmed by the price. What the oscillator told us has been confirmed by the price. This is what I wanted to show you on the relative strength index. Go have fun with it, play with the oscillator. It is one of the best out there, and I really enjoy this one. Next recording is going to deal with the custom indicators, and we'll pick from the custom indicators just one indicator to look at. And why I want to do that recording is because any other indicators that you may find or may even program, if you have programming skills, the only way to bring them into the MetaTrader platform is under the custom indicators. So until next time, take care and good luck in trading.